Hello guys, welcome back. So I got a couple of people asking on the comment section why I never use a logarithmic chart. So today I'm going to be using the logarithmic chart and we are going to be talking about the long-term trend for Bitcoin and whether it's broken or not. In other words, if the bubble popped already or not. So as you guys know already, if you follow this channel, I do swing trading in cryptocurrencies. I have a long-term position which I never want to sell, but the position that I have for trading, I don't do day trade, but I don't do, long-term holding either. I don't hold through multi-month bear markets or anything like that. This is the reason why I use the 20 and the 50-day moving averages, and that's why I use the daily candles usually. Sometimes I look at the 4-hour candles or sometimes I look at the weekly candles, but these are my three main ranges, 4-hour, daily or weekly, but the daily is my main, the main chart that I trade for swing trades. And the moving averages are the 20 and the 50. The reason is because I want to hold through swings of, medium term like this. This cross in the 20 and 50-day moving average, this cross is my buy signal, this cross is my sell signal. That is why I use the 20 and the 50 moving averages. This cross is my buy signal and this cross is my sell signal. So I hold through this swing and then I exit before the crash, and I don't enter again until moving averages cross bullish again, and then I exit more or less a little bit before or a little bit after the moving averages cross. If I can if I can see they will cross eventually, I exit before they actually cross. As soon as I see them bending down and trying to cross, I will exit my position. So that's what I did here, that's what I did here, then I re-entered here when we had this cross right here, and basically I exited here. Parts of my position, of course, not everything, but this is just me because I swing trade, right? I trade swings of this size. That's how I like to do it. That's how I'm comfortable doing it. But in the world of trading, the typical moving averages are the 20, the 50, then the 100, and then the 200, right? Most of the traders use the same settings. They will use the 20, the 50, the 100, and the 200 moving averages. For swing trade, like I do, 20 and 50 is ideal, as you can see your buys and sell signals. But for more long-term trading, people will use the 100 and 200. So let's see. Let's change this to the 100 for more long-term trends, all right? So 100 and 200. The blue line is now the 200 moving averages, the 200 moving average, and surprise, surprise, we are bouncing here. Not bouncing, but it's acting as a strong support. So if we understand that there's four main moving averages that most of the traders use, the 20, the 50, the 100, and the 200, it means that the 200 is the last level, for the long-term trend to hold. If this level is broken, if the price closes, the daily candles start closing below the 200-day moving averages, then guess what's going to happen? The long-term traders are going to have their sell orders triggered, which means the selling is going to accelerate. We're going to have a big drop here because, as I just said, the long-term traders are going to sell here once the trend is broken, which is going to be broken if we start closing below the 200-day moving average. Now, what can we expect from here if this breaks below and we drop here? Which I think is what's going to happen, but we will see. What's going to be the next level of support? Well, then the next level of support, we need to go into bigger time frames for even longer trend. And if we go to the weekly candles here and we start using the moving average, as I said before, we start with the 20, then 50, then 100, and then 200. So let's see the 20 and 50. That would be the first moving average, the 20-week moving average. It's already been broken and closed below it. So our next level of defense for this time frame, for this long-term trend, it's going to be down to 5,600, more or less. Right now the moving average is at 5,500, but by the time the price gets here, it'll be a little bit higher. So the target is 5,600. This is our next level of support. If, as I said before, if on the daily candles, if we break and close below the 200-day moving average, which is exactly at the level that we are right now, we are fighting to stay above that line. Doesn't look like it's going to hold, in my opinion, but it's still holding, so there's nothing confirmed. Now, if it breaks below on the daily candles, then the downtrend is confirmed, and our next level of support is going to be at 5,600, since this is going to be the moving average, the 50-week moving average. So this is my target for Bitcoin, my next target down. And also, let's see if we go to the 4-hour candles. Let me get off the logarithmic for now. Okay. Surprise, surprise, I'm in the 4-hour candles and we formed a bear flag here and it broke down. So Bitcoin bear flag broke down, target 5.6, which is the exact target for this flag. You know how you get the targets for flags or triangles or any other patterns. It's the length, you know, the vertical distance from the top of the pole to the bottom of the pole. So I just copy it and paste this line here, and the target is, surprise, surprise, at 5,600. So there's a lot of signals here that we are going, that are pointing to the 5,600 as a next support. If this low breaks down here, if the price goes below this one, expect free fall. Why? Because this low is exactly the 200-day moving average, which I just showed before in the daily chart. So if this level breaks down, it means a lot of sell orders are going to be triggered by all these longer term traders. Okay, their trend is broken if we go below this point here. So I have been showing this with time for my premium members here over in Telegram. This is our Telegram private channel here, where I post signals and notifications. So as you can see, before this flag broke, when it was forming, and I said here, remember, patterns mean nothing until they break. In other words, don't short. However, if it breaks down, the target is pretty deep. I know I made a spelling mistake here, but anyways, if this low breaks down, expect free fall to 5,000, or you know, in the 5,000 range. And after that, once the flag broke, I posted this for these guys, and the target was at 5.6. One of the members opened a short position right here at this level, and he asked me where should he set his stop loss, because as soon as he opened the position, it went down a little bit more, and then it reversed and it started going back up. So I have here the lines. This line here at 8,575, this is his short entry, and I told him I would put the stop loss at 8,975, and I know it's a big range, but if you go into the 1 hour candles, and I'm explaining this to teach people how you can set your stop losses if you need. Your stop loss should be always above the moving averages or above the previous high here. So his entry was here, and you see he entered on this line, and then the prices started to go up in this candle. So I said your stop loss should be above the previous high of this candle here, so it would be right there. And now you can start lowering your stop loss. Of course, there's no guarantee that this target is going to be reached. It can reverse on you anytime. That's why you want to be, lowering your stop losses. Just in case, so you don't lose any money, but don't exit the position in every little bounce, because if the target is 5,600, you need to stick to the target, take your chances, protect yourself lowering the stop loss, but don't lower it too much, because these markets are very, very, very volatile. And you are dealing with troll coin here, so if you put the stop loss too tight, you can be sure troll coin will go up just to trigger your stop loss before continuing lower. So I know this is a big range. Especially he was shorting with 10 times leverage, so that's a big range, but it is what it is. Cryptocurrency is volatile. You cannot set your stop losses too tight. So guys, that's my target for Bitcoin at the moment. If nothing changes, 5,600, and I explained all my reasons here, and I talked about the long-term chart. If we break at this level, then the long-term trend is broken on the daily charts, but we still have another level of defense on the weekly candles at the level of 5,600. If we get there, once we get there, I will continue to update, but this should last for some time, unless this reverses now and I have to change my assessment. But for now, that is all. If you guys want more, you can go to my website and subscribe for the premium membership. We're very active in Telegram. People ask questions all the time there. They interact with me. They ask me about charts. I post charts for them, and I post these types of signals. All right, guys, that's all for today. Thanks for watching. I'll see you soon. Bye.